Welcome back to Confident Real Estate. I'm your host, JC. Now, unless you've been living under a rock for the past several months, you're probably aware that we just went through a very heated presidential election. And at the end of the day, we learned that the country is very politically divided. But the votes are in, finally, and it appears Joe Biden is the president-elect, officially. So no matter how you feel about that or how you voted, you need to get yourself ready as a real estate investor to understand how a Biden presidency is going to impact home ownership and real estate investing in the next 4 to possibly 8 years. So that's what we're going to cover in this video right now to get you prepared for the impact of a Biden presidency on your investing strategies. And we're going to talk about how to adjust your real estate investing strategies according to what we know at this point that we can anticipate the Biden White House to be pushing for. Only time will tell what Biden has planned for the economy and how it will really impact the real estate markets. But for an early indicator, we need only look as far as Biden's own campaign website, which actually has a pretty comprehensive plan laid out that covers everything from affordable housing issues to eliminating discriminatory lending practices. But one major point of interest for all new real estate investors is Biden's targeted tax credit. For all of you who have been waiting on the sidelines for the right time to start investing in real estate, pay attention because this is it. And for all of you who have been watching this video, who are either new real estate investors or seasoned real estate investors, pay attention because down below there's this gray thumbs up button, and if you press it, it turns this really awesome shade of blue, and that's going to make everybody happy. But if you want to make me even happier, please hit that red subscribe button down below right next to that gray thumb that you're going to turn blue. Thank you. Biden is proposing something that's going to be called the first down payment tax credit. It's going to be a advanceable and refundable credit worth up to $15,000 for qualified buyers. Now, the intent is to make that money available for buyers when they are actually purchasing a home. It's not going to be something they have to wait for until they file their tax return at the end of the year. The specifics of how the credit works are something that we're going to have to actually keep an eye on and watch if the bill actually gets passed in the first place. But what does seem clear so far is that it's only going to be people who are first-time home buyers that are eligible for the credit up to $15,000, and that it has to be for a purchase of a primary residence home. But if there are any additional qualifications for who can qualify and whether or not there are other requirements that need to be met by anybody applying for this credit, those are the details that we're still going to need to see ironed out that have not been elaborated on thus far. If this concept seems familiar, that's because it's rooted in the American Recovery and Reinvestment Act of 2009, where a temporary tax credit was passed in order to help the American economy move past the Great Recession that we were struggling through at that time. In that situation, buyers who were claiming the credit had to have not owned a home for the 3-year period prior to claiming that credit. Whether or not this Biden tax credit is going to mirror image the overall qualifications of that prior act that it's rooted in remains to be seen. But it does seem feasible that there are going to be additional qualification requirements attached. So is this a real opportunity to start investing in real estate? Well, the financial aspect and burden of real estate investing is the biggest hurdle that is a deterrent for most new investors getting started in building their real estate portfolio. Additionally, it is the financial deterrent that is the biggest obstacle for most families to actually get to the point where home ownership is attainable. But while this new Biden tax credit may make home ownership more attainable, it remains to be seen and is probably unlikely that it will immediately spark a surge in investing. For one thing, if the rules to the new credit are similar to those that apply to the American Recovery and Reinvestment Act, then we can say for sure that the only people who are going to qualify are people who are buying a primary residence. You won't be eligible to qualify for the credit if you're buying a rental investment property. Then again, $15,000 also doesn't seem like a ton of seed capital when you look at the fact that median sales prices of homes across the United States have skyrocketed since the pandemic began. We're currently sitting at a median U.S. home sales price over $310,000 when back in January of 2020, less than a year ago, we were at $266,000 as a median home sales price. Still, that being said, $15,000 is not nothing. If the bill actually passes, that could be beneficial and a great help to many families and potentially some investors. But again, I just said it's not qualifying for investors. Investors don't qualify to buy rental property under this new credit. Or is there a loophole and exception? Regardless of its final form, if the first down payment tax credit does go through and get passed, then it will definitely help a lot more people to be able to obtain the status of home ownership. And that will create a lot more stability financially for these families and allow more people to then go out and create wealth for themselves by starting the journey to invest in real estate as an asset in their portfolio. It also may help in other ways, like house hacking, which we did an entire video on, and I'll leave the link to that down below so you could watch it when you're done watching this one. House hacking, where you buy a multifamily home and you use one unit as your primary residence, which would then theoretically qualify you for this Biden tax credit program. But in the meantime, if you're buying a duplex, triplex, or quadruplex, you're going to have additional units that are not your primary residence that you can then go and rent out. Or you can buy a larger home than you actually need if you can qualify for it. And in that case, you rent out the extra rooms to your friends. This is a tremendous way to start building wealth if you are young and don't have a family yet. Maybe you're right out of college and you have your first job and you have a whole bunch of friends from college who moved into the same area as well as you did. And you can go and buy a bigger house and then rent out the rooms to them as your roommates and basically live for free and maybe even have some cash flow left over. And you would qualify for the credit. But if you're a house flipper, you may not actually be able to qualify for the credit to go buy your next flip project, but there will be a larger pool of potential buyers who are ready, willing, and able to buy your next project from you once you're completed, because they will have the benefit of a $15,000 tax credit waiting for them to hand over to you so that they can move into their first home now that home ownership is an obtainable goal for them. However, that being said, if you're utilizing the slow flip strategy that we also did an entire video on, and again, I'll leave the link to that video down below so you could watch it when you're done watching this video. That's the strategy where you buy a home as your primary residence, you move into it, and you renovate it room by room and do a slow fix up. It allows you to qualify for much better financing options, the ability to get loans where you put less than 20% down on the home when you move in. Now you could potentially qualify for up to $15,000 tax credit on top of that. And when you go and finally sell your completed project, not only are you keeping significantly more of your returns because you're not subject to ordinary income taxes like a traditional house flipper would be, but you're also now selling to, again, a bigger pool of potential buyers who qualify for a credit and have the ability to buy your completed project from you, vastly increasing the returns you're going to see on that slow house flip. As I said before, I'm going to leave the links for the Truth About House Hacking video as well as the Slow Flip to Larger Profits video down below, and you should absolutely watch those once you're done watching this video. I appreciate you taking the time. If you didn't know about the Biden tax credit, now you do, and you should really keep an eye out for it because there are potential investment opportunities and potentially an opportunity for you to buy your first home and do a house hack with a lot less seed money out of your own savings account. So be aware of it, keep an eye out for it, and let's see where this takes us as January rolls around and Biden steps in and swears into the oath of office and begins his process of his first term as president. Thank you for watching. I appreciate it. If you haven't hit like already, do so now. Hit subscribe because if you're watching these videos all the way to the end, you absolutely have no reason not to hit subscribe. We're providing multiple educational videos to build your confidence every single week. So please hit subscribe. I appreciate it. And once again, until next time, you're watching Confident Real Estate.